Ladies and gentlemen, welcome back to the live crypto trading room. Hopefully everybody's doing absolutely fantastic this morning. It is Tuesday, February 13th, 2024, foul year of our Lord. Shout outs to chat. Hopefully you guys are doing well. Let me know how you guys are doing. Let me know if you guys are long or short, if you're in profit or in loss, whatever. We'll put it all together. We'll bring it all together. We got a lot to talk about today. Stepping into the market, obviously, yesterday was very impactful. Bitcoin reaching 50,000 for the first time. And something very interesting today. Let's actually pull up CoinGecko because I wanted to talk about this. CoinGecko. Here we go. And we go to highlights. And is it on here? No, I guess it's not on here. I don't actually know where they have the fear and greed index on their thing. All right, we just have the highlights, but the fear and greed index has reached 78 for the first time. I bet if I just search for it, CoinGecko fear and greed index. Here it is. No, I just want to see the fear and greed index. I don't want the information on how it's calculated. Thank you very much. All right. Well, anyways, this is embarrassing. Moving right along. Fear and greed index is at 79. All right, which is the first time that has happened since November 2021. CoinGecko just tweeted out just a few minutes ago. So fear and greed index is popping. We are in that extreme greed mode that we haven't been in. And this really, as a trader, this really sets up an interesting dynamic because on one hand, we know as traders that the most opportune time to enter into a position is typically when the entire rest of the market is on the other side. So for example, when you see, at the height of the bull market, when you get that big, massive God candle to the upside, open interest absolutely goes ballistic, volume goes ballistic, everybody goes long. That's when the market turns around. And conversely, at the end of a bear cycle, when the market is very low and you have that death candle to the downside and everybody thinks Bitcoin is going to zero and everybody's market shorting and everybody's just scared and screaming and panicked and watching their portfolios, that's often when price stops going down and begins moving up. So very, very interesting dynamic. And as I said, we have that situation now where Bitcoin has entered the extreme greed. On the other hand, as a trend following trader, we know that sometimes it's when we get to that breakout mode and things start going ballistic, that is when we're at the beginning of a big parabolic move. All right. So it can cut both ways. And obviously, as with all trading, at the end of the day, you just have to do your best analysis. You have to take the position that you think makes the most sense. And then you just got to stick with it. All right. As a trader, there's always going to be times when you're on the wrong side of the trade. Right? And other people make money and you lose money. That's just part of the game. You're never going to be able to get all the movements right. There's going to be times when you think an asset is going to go up and you go long and everybody was going short and they were right and you were wrong. Don't let that bother you. It's just part of trading. The goal is just to be consistently profitable over a period of time, right? So in general, you want to be more right than you're wrong. However, you can also have a strategy where you're wrong almost all the time, but that one time that you're right makes up for all the losses, right? So again, it just cuts both ways. All right. So let's start off with our big game plan here. BTC on the weekly. All right. BTC on the weekly has broken out of this channel that we were trading in, this weekly channel. The big things to pay attention to here on the weekly that I think are important is obviously this volatility reset. All right. BBWP came all the way down, indicating that volatility was very crushed. The Bollinger Bands got very, very tight, indicating that price was trading in a very narrow range. That's very significant on the weekly. When we see a volatility crush like this, it is a warning sign of upcoming expansion, that there will be a strong directional move in one direction, and your goal is to attempt to bet in the right direction. So we did have, of course, this volatility crush in this weekly consolidation range as we were consolidating right at the top of the channel. And the movement that we have gotten so far is an expansion to the upside. Of course, we just have to ask ourselves, as we've now moved into that extreme greed, and as we have kind of been all cycle looking for that pre-halving dump that we've seen in previous cycles, coupled with the fact that we now know that price, again, we've entered into extreme greed. In addition to that, this is the peak of the previous bull market. This is the low of the current bear market. And we have now done a full 61.8% retracement. So kind of completing that golden pocket Fibonacci. How much stock do I put in Fibonacci? Not too much, but the rest of the market does. All right. The rest of the market does. We do see these big swings around these pivotal key Fibonacci levels. So to ignore them, I think, is a disservice to our analysis. Good morning to you. Yes to crypto. Welcome, welcome, welcome. All right. So our current prediction right now is that price does continue and complete this move to 52.53 before we see a large rejection. All right. If we are able to surpass 52.53 and make it to 57, well, this is a high volume node, as we've gone over many times. It is a high volume node, so there is much less of an opportunity for price to reject violently from there, and much more of a likelihood that price consolidates at that level and reestablishes that as support before likely continuing upwards. All right. If we are able to get to these key levels, it makes it much less likely that we then fall down. All right. Contrary to what I think some people believe in the markets. Whereas, obviously the higher up we go, the danger of a market-wide sell-off becomes greater. But at the same time, I don't think we're at those levels yet. We're not at new all-time highs. And a good majority of BTC holders who are going to determine price are, it's a cult, man. It's a cult. Everybody's looking for new all-time highs. So, but of course, we do know that from most previous cycles, we do have a rally off of the bear market leading up into the halving. And then prior to the halving, we have a pretty strong sell-off that comes around generally in March. So we are looking for if price is to follow the previous pattern that we've seen in previous cycles, then we would see some type of very strong, very noticeable sell-off, something on the magnitude of 20 to 50%, that would culminate in March or April. And then the halving kicks off in April and we go into full bull mode. So that is basically the only overhang that we're looking for. We are trying to catch, we are trying to anticipate, we're trying to collect and profit off of a punctuated sell-off to the downside. Of course, we also don't want to be shorting a bull market. We don't want to be constantly thinking that every peak is a high and taking that opportunity. So anyways, looking for that big rejection around 52.53. I think we'll be quite patient with that, because if that is going to be the 20 to 50% sell-off that we're looking for, there's no need to rush it. We're going to have a good month and a half to 2 months to catch that sell-off, to catch that move to the downside. So I really do want to wait and see, good, strong rejection and a kind of the creation of a bearish trend on the daily and or weekly. But as far as the weekly goes right now, things are good. Again, the things we're looking out for is I'm looking to see if this BBWP or if this movement coming off of the volatility crush is going to be a fake out. If this is just a little short squeeze to capture liquidity, grab up these prices, and then move down. And that will be the expansion that we would expect to see, that we are seeing right now from volatility following that movement. Weekly TSI is still bullish. All right. We still have a nice bullish trend. We haven't entered into a bearish trend on the weekly. Absolutely everything's fine. We are, of course, oversold. And one thing I am watching very closely here is to see if we do form regular bearish divergence here on the weekly time frame. If we were to form that weekly bearish divergence, as I said yesterday, that was the signal that got us as a team into the market back here in December. We identified this regular bullish divergence that was coming off as we were just kind of starting to descend down. So we began to position into Bitcoin right around here. And we recommended our clients did in the premium trading group as well. And then prices took to the upside. And it's been a very good 2015, 2016 bull market. Very, very happy. Cannot complain. But it would be very telling then, excuse me, it would be very telling then, because we haven't had any other kind of regular bearish divergence on the weekly time frame so far throughout this 2023, 2024 cycle. So kind of starting off the movement with regular bullish divergence and kind of finishing the movement with regular bearish divergence would be very poetic, would be chef's kiss. And so something that I am watching for here quite well. So we do have, we are starting to flash warning reversal signs. If we do switch over here to our reversal system or reversal trading system, we will see that while we are in warning sign territory, our model is not screaming at us that risk is inherent, that we need to short right now. So we're not there. We're not there. Doesn't mean that this isn't the time when price does reject. We are trading up very closely to the upper boundary of the Bollinger Bands. We are trading at almost 2 standard deviations above the mean right now. That's always a risky area. And again, we are potentially going to be forming regular bearish divergence here on ISA spot as well. And volume, as Tyler so sagely pointed out, volume is not really confirming this break to the upside. We are not seeing rising volume. We're not seeing rising volume. In fact, we're seeing lower volume than average. And trends, you want to see strong volume come in at the beginning of a trend. You want to see that strong volume come in at the beginning of a trend. So overall, on the weekly, we are definitely sitting and holding. We are looking out for this anticipation. We are looking out for this opportunity to take prices down. We do, of course, have our downside targets here at 37, 28, and 23. That would just be, accounting for just a more bullish pullback to the bottom of the trading channel and accounting for a more bearish pullback to the 200 SMA. And then, of course, the liquidity directly underneath this channel that we've been trading in. Keep in mind that in all previous cycles, we do experience this. We do experience this run up off the bottom, this powerful rally off of the bear market bottom, a 100 to 200% rally. But the thing is, the pre-halving run-ups, so the bear market capitulation bottom to the pre-market top, the pre-halving market top, that rally has gotten smaller and smaller over the years. All right. Whereas the halving rally following the halving, that has gotten stronger and stronger over the years. So we are kind of expecting a powerful rally, nice full parabolia. We do expect 2024 to be an absolutely fantastic year. And here's the thing, guys, all this trading and analysis and trying to get good prices and all that stuff, like it's good and exciting. But at the same time, I know that a wide segment of our audience are also going to be more passive investors, just individuals looking to do well in cryptocurrency in general. And for those individuals, and for the traders as well, right? For your portfolios, listen, guys. There has been one cycle where I made more money trading than investing in cryptocurrency. But, on top of all of my trading, the majority of the wealth that I've been able to extract from the cryptocurrency markets has been buy and holds, portfolio management. All right. And in that sense, all right, in that spirit, the best advice I can give individuals to not be sidelined, because that's the biggest risk of attempting to be a little bit too complex, getting too much into the trading and ignoring the investment, is that you often end up sidelined because you don't buy and you don't hold. So the best advice I can give the passive investors, the individuals just looking to do well in cryptocurrency in general, guys, 2024 is all about adding. All right. Any dips, add. And if you're not going to do well, you're not going to make profit if you don't buy. All right. And it's scary. Like, prices are elevated. Market cap is rising. We're not getting those killer deals that we were getting back when everyone was scared to buy and FTX was collapsing. But that time has passed. And we're only, I think, about 30 to 50% into this rally in the first place. Right. And if the post-halving rally is going to be more powerful, as we've seen, than other previous rallies, then, you just got to buy. You got to get in, you got to position, and you got to hold. You got to have the courage. You got to have the conviction. So again, what do I recommend buying? Projects and tokens that you understand, right? Invest in project and tokens that you understand. Because if you understand what you're investing in, then you won't get scared, or you'll be less likely to be scared due to volatility. All right, because you're gonna have to deal with volatility. It's cryptocurrency. Come on, guys, cryptocurrency. All right, Bob the Builder. Good morning to you, my friend. Welcome in. So glad to see you, my friend. Okay, so we've got obviously nothing's changed here on the weekly, right? Breakthrough 52, 53 up to 57. I think we probably stay at 57, and the likelihood of some big pre-halving dump becomes less likely, because of course that is also a possibility. We've had so many developments. So many things have changed, so much more institutional money in the cycle this time. And the retail might just come charging in and we don't get that big pre-halving dump. And we just keep this as the most bullish rally that we've ever experienced with only 20% pullbacks. That is completely possible. Completely possible. All right. But until then, we'll try to trade technically and be technically correct. All right. So that's the weekly. That wraps that up. Going to the daily, we do have kind of an interesting development. We've hit 2 of the 3 take profit targets that we called for our swing long. All right, we'll continue to hold that third TP. And of course, we do have that swing long open right now, of course, in the copy trade account. Shout outs to all the copy traders right now. Link in the description if you want to copy trade me. So we've hit 2 of those 3 take profit targets. Third take profit targets sitting at about a little under $51,000. So we'll just continue to hold that for right now in case we get a liquidity hunt. We do, of course, have this channel that we've been trading in. Let's actually get the EMAs off so you can see this a little bit better. We do, of course, have this channel that price has been trading in ever since we broke up above the previous consolidation range back in October of 2023. This has been very consistent, very accurate as far as gauging price. So we are, of course, going to be taking this short position. Why? Daily BBWP is almost petered out and maxed out right here. It doesn't always max out before a little bit of a rejection. What kind of pullback are we looking for here? Something on the order of 10 to 15% would be absolutely fine. That'd be also in line with the pullbacks that we've seen so far in this bull market. Nothing greater than 20%. Hello, William. Welcome to the chat, my friend. So we've only been experiencing like 20% pullbacks, and we're just at the top of the channel. So this is just a good, technically correct position trade. We do have our stop loss around $52,000. That will allow this take profit to get hit if we do have something like an hourly wick to the upside. Kind of grabbing liquidity, we can see that happen right here. Doesn't always happen, as you can see. Of course, it doesn't happen over here, but it is, you know, it's very common to happen once we start developing into these channels, because I'm seeing something that looks obvious. And so if this looks obvious to me, it looks probably obvious to a lot of other market participants as well, meaning a lot of people are going to try to catch this trade. And of course, market makers and liquidity hunters and stop loss hunters, they know that. So they know that lots of people are going to be shorting, and they're probably going to be putting their stop losses pretty close. And that is an opportunity for these market makers to grab that liquidity, get the better price, and move price down. See, it's not like they want, I think people get the motivations of market makers wrong. It's not that they want to stop you out because they want to hurt you. Their intentions aren't malicious. Market makers are good. They are there to provide liquidity and keep volatility down. They serve us, right? Market makers serve us. Without them, we wouldn't have a pleasant trading or investing experience, a buying and selling experience. But market makers want to make money, right? And they want to make more money. They want to do better. They want to do as well as they possibly can. And so for a market maker, they of course have the option to see. Market makers don't just like, at the end of the day, I don't care what the mandate of any market maker is. Even if the mandate for a market maker is to just like, don't directionally trade, make your money from volatility, make your money from filling orders, you know what I mean? Like just market make your money that way. I will tell you this right now. There's not a market maker on earth who does that, right? Because the pressure on them to return money, to make money for their firm, for their investors, for whatever pool that is giving them all this money that they need to market make in the first place. You know, all of those investors, they want money. They want a return. They're funding a highly dangerous market. If they're market making in cryptocurrency, that's high risk. And so they want a good return. They want a fat return off of that money. And so the market makers are all directionally trading as well, right? They're all trying to make money, and they want to get the best. They want to take this trade. They want to take the same trade that we want to take. They always do. Market makers see the same trades we see. They want to take the same trades we want to take. The thing is, market makers have the power to push price around to try to get a better entry, to optimize their directional trades. So market makers don't want to enter here when, for example, people like me are entering, right? Market makers know that the movement is probably from here to here, right? And they want to capture that 8% movement. But if they enter here versus if they are able to push price up here, boom. The other reason they want to push price up there and hit stop losses is that that's going to trigger a bunch of market orders that can then fill limit orders that they set at that price. So they're getting filled at a much better price, and they're going to make much more money off their trade when it's concluded. And they're getting in with significantly less slippage to their position, and they're paying less fees because they're able to use limits. So they are setting themselves up to have the most profitable trade possible. They don't care about you. They're not trying to stop you out because they want you to fail or they want you to lose. No, they just want your entry price. So where you set your stop loss or your liquidation level, that's where they want to enter. So that's the only problem. So if you're getting stopped out a lot, if you're getting liquidated a lot, the problem isn't that the market makers are hunting you or somebody's out to get you or anything like that. They are, but it's not personal like that. And they wouldn't hunt you. They wouldn't be able to hunt you if you would just set your stop loss in the right place. Stop setting your stop loss in the right place. Stop setting your liquidation level in the wrong place. And the market makers won't be able to take advantage of you, right? You need to trade like they do. All right. Good talk. Good talk. Thanks for listening. Anyways, so we'll just take this. We'll just take this setup. This is pretty decent. We can go ahead and structure this. This is totally fine. We'll go ahead and set this stop loss right here. And of course, we're going to continue holding the swing long. And then we have a target here. And then where did I set my ultimate target actually? 46, 346. And then we're also going to move our stop loss up on our swing long into more profit. I'm sorry, I completely forgot what I said. 46, 346. 46. There we go. There's our take profit. And also take advantage of this too. Okay. So just a good technically correct trade. And this is the range high short. All right, we're at the range high. RSI is overbought. Volatility is peaked. All right. It's just a good time to experience or anticipate a reversal. And we'll take that trade on the daily. And again, because we also have on the daily time frame, remember, because we got our trading signal here. All right. Price had broken above the 21 exponential moving average while price was above the 200 exponential moving average, meaning as far as trend following trades go, we really only want to be targeting longs. We only want to swing long, and we're not swing shorting here. That's the difference. We are not swing shorting. We're just channel trading. We're range high trading. We're trading support and resistance. Oh my God, dude. Yes to crypto, man. Thanks for the 10, brother. Much appreciated, man. Thank you. Hang your take on market makers. Thank you, my friend. I know with you. I just think, listen, we're trading crypto futures, and because we're trading crypto futures, market makers, liquidity, liquidation zones, all of this is extremely important. All right. These dynamics are extremely important to understand if you're going to trade crypto futures. If you just want to trade crypto spot, it's so much easier because there's so much less that you have to worry about. And when trading crypto spot, all you need to worry about is, yeah, thank you, man. Really appreciate that. I'm gonna move up here though. I don't know why that alert keeps moving down. Yeah, crypto spot's a lot easier. You just buy low, sell high, right? Buy low, sell high. With futures, I mean, it can be that simple, but it's often unfortunately not. Okay, so I think the daily game plan here is pretty simple. Of course, keep in mind that we do have the swing long. With regards, actually, we do need to think about that because we have a swing long right now, and if we're gonna say that price can pull back 15 to 20%, then we do want to hold the swing long. But if so we entered like here, unfortunately. So if price does come all the way down, we're gonna be in potential drawdown on the swing long. So we actually gotta think about that. We gotta think about that for a second. I hadn't thought about that. Okay. Because on the one hand, I do want to leave it open to run. I don't really feel like betting right now. That's a tough one. All right, hold on. Let's go first off. Where's our stop loss? 44,360. Okay, so here's what I think we do. Oh man, thank you, William. My God, what is happening? What is happening this morning? Dude, thank you so much, man. William, for the 10, man. Thank you so much, man. I appreciate you, brother. Thank you. Okay. All right, you guys see my dilemma here? This is, I mean, because we got a great swing long. Prices come up, we're at resistance. It makes sense to take profit. But we want to leave the runner because if price does run up to 57.58, we want to hold that. But if we've set our stop loss up into profit, and if this short does play out, then we'll get stopped out. And that doesn't make sense. So we either should take profit here. And the problem with the short is that I didn't size up enough on the short to make it more profitable to hold the short down to the long's entry price. You know what I mean? I will, it's not losing money. And plus, Cryptonomics, what's up, man? That's a tough one. That is a tough one. There we go. There's the alert. Yeah. Thank you so much, man. That is a tough one. I'm not 100% sure what to do. But at the end of the day, I think okay. I know. It's all right. I know what to do. Super simple. All right, so we're gonna come over here. Yeah, we're gonna stick to our principle. Oh. Yeah. All right, now you're kind of starting to pick me up. Let's refresh. And see if we have it. Why? Okay. Done. That's okay. Okay. Cool. You want to be that way? And we'll be that way. We will just come in here and we're going to set our stop loss back down to 41.818. Yep. All right. Why? Okay. So why is that my decision? All right. Honestly, after I thought about it for a few minutes, it was super simple. I think that in the long run, there is a lot more money to be made to the upside with Bitcoin than to the downside. All right. I've certainly made more money as a trader longing Bitcoin than shorting Bitcoin. Like, don't get me wrong. Like, obviously I've had fantastic trades and big profits shorting, but overall, I am a believer in Bitcoin. I'm a believer in the bull market. I think that in general, the winds of chance are on my side if I trade to the upside versus trade to the downside. All right. So that means that in this situation, if I have to choose between which I want to favor, the long or the short, I want to favor the long, right? I want to favor the long. There will be more money to be made by me being completely wrong on this short. And if price breaks to the upside here, than being wrong. And I'm also totally fine holding that short all the way down. And letting it, oscillate around to see if we can get a pullback and then continuation back up. All right. I'm into that. I'm okay with that. All right. I'm okay with that. So that's why. It's, you know, honestly, it's just pretty simple. Again, if we just think about it for a while. All right. With that being said, let's get into our LTFs here and see what we got going on. First thing we need to do is update our liquidation levels. So let's go get those from CoinGlass. This is a free resource that we have been using every single day to increase the accuracy of our BTC day trading. And it's been fantastic. It's been really, really good. Okay, so we just got to update our liquidation levels. We just chewed through a bunch of liquidations. Let's see here. Let's go see how many liquidations. Nice refresher. Not talking Starbucks. Okay. Yeah, so big drops in open interest here. Open interest has run up in this rally about 17%, which is extremely significant. And what did we just experience? Just experienced, about 5% drop of OI. Big volumes. All right, big volumes. Big drop in OI. We probably continue south. Funding is extremely high. Market is a little overheated. Good amount of liquidations though. Very good amount of liquidations here. Let's go to, let's just update our liquidation heat map and see what we're working with. Okay, we've got liquidations at 48,360. Yeah, so 48,366. Yeah, so we chewed through all these liquidations just now. Leave that one. 48,366. Excellent. We've got liquidations here. And then from 48,285, 285 to 041. Eight. Okay. So we got licks right there. And to the upside, 49, 219, 219 to 341. And there's our liquidation zones to the upside. Boom. Boom. And then above that, yeah, we got some at 49,504. Some at 49,504. We got some at 49,707. And we got some at 50,073. I think that's the last pretty significant. There we go. All right, so there's our liquidation profile. As you guys can see, we're right in the middle of the range. Tyler, it's all right, man. We were getting through. Tyler said it yesterday. The funding rate is too damn high, meaning any little slightly negative news event can spook the degenerates. Can spook the degenerate over-leveraged market. Yeah, I saw a report that like over 10,000 Bitcoin worth of open interest was added to calls, weeklies, and 2 months out in the last 5 days. So that's a lot. That's a lot of greed. It's a lot of greed. All right. All right, Tyler. So tell me the strategy again, man. All right, let's talk this out. We're on the 15. Okay. We've had a big move. Volatility has spiked now. We got a volatility peak. Got an oversold signal. So what would we want to wait for now? What would we want to see to trade long, for example? Yeah, so we hit licks. The question is, do we probably hit licks to the upside? Probably hit licks to the upside, so we probably want to trade up. Basically just front run this a little bit. The 1% move. Big day trade. That's two more. Yeah, that's too many tools. I see. I feel you. I feel you. I don't want to throw the Hearst on right now. Okay. I see what you're saying. Alex81SG, good morning to you, my friend. Should we talk about the perfection at which the S&P dropped to fill that gap from February 6th? Bye. That's pretty beautiful. Yeah, we filled that gap very nicely, didn't we? Yeah, that's pretty nice. I realize we gapped down 1%. That is crazy. Oh my God, Alex, good eye, my friend. Fred, wow, man, what's up with what is going on this morning? What's Fred with the 5, man? Thank you, brother. Thank you. He says, could I check out ByBit and Akash? I've got some money on sideline. Should I put some in? I know it is not financial advice, but I appreciate your generosity and support, my friend. And let's see. I'll tell you what I would do. All right. I'll tell you what I would do. That setup in reverse is how I caught that 3-minute shirt scalp yesterday. Are you scalping the shirts? Or shirt scalping? Scalping the merch store. You know what I'm saying? Got to get them. Got to catch them all. All right, hold on. I think I'm here for the not financial. Let's see here. We'll look at bottom feeder here in a little bit. Check what we got going on here. Are we? Yes. This all looks good. That looks good. Man. It's so good. My God. This is from when? Yeah, 2020. Wow, that's absolutely insane. Okay. Sorry. Let's go look at. We have to verify our humanity. Hey, Alex, what's up, man? So, listen, I know this isn't what you requested, but can we just talk about... I mean, guys, you see this, right? Yes to crypto, right? You remember all these like little boxes that we drew for Kakinu? I mean, you know, like, that's pretty darn good. I think we did a good job. You know what I'm saying? Consolidation, breakout, punctuated move to the low volume node, return. Yeah, we got to get up here. For cock being ready to rock. All right, for Mr. Fred, we want VAIOT. I'm sorry, I just completely honest, man. I've never even heard of this. All right, we got $807,000 in liquidity, $64,000 in 24-hour volume. It is almost 2 years old. On the Ethereum mainnet. Okay, peace. Life's good. The Dixie's got me worried. Reclaimed and held the 200-day. Yeah, we'll look at the Dixie here in just a little bit. I want to look at Violet. Dylan. Let's take a Gandhi here. All right, hold on. Let me see if I can get some data for you. I want to get some better data for you. I'm not sure if I can get it, but try. All right, so we got the price of Vi here. I want to see. Total amount. Okay. I don't like that. That helpful. No. Okay. Social dominance. Well, okay. I will say just one interesting thing that I see. So this is Vi, and this is social dominance in the blue. And what I notice here is that Vi had a massive peak in social dominance back here in October of 2023. Okay, see that big spikes in social dominance, meaning what that probably means realistically is, since sentiment tracks social sentiment across Twitter, Telegram, Discord, and other, and Reddit, Reddit, and 4chan, that probably some notable individuals started tweeting or doing a campaign for Vi on or around this time. And the only reason I point that out is because price then rallied like an ungodly amount. Price rallied an ungodly amount. And we can see that social interest kind of picked up here. It picked up here before this pop. Didn't spike at the top. And now social dominance is starting to spike again. All right. So people are starting to talk about Vi again. Prices have come down nicely. Okay, that's helpful. Transaction count. We want transaction volume in USD. Okay, so this is some data that helps me. Let's go over it one by one. Metric. Okay, so first off, Vi, total amount of holders. All right, this is the yellow line that we see on the graph. Total amount of holders has been increasing. All right, total amount of holders has been increasing. In fact, quite significantly so. All right. Now we haven't really made. Here is what's interesting. We can see here very clearly how the distribution of holders has evolved. All right, we can see that throughout this time period, this line is growing. More people are buying. More people are buying. More people are buying. A lot of more people are buying here. The rate of new people buying is increasing. And here, when it peaks, it just goes parabolic. All right, like everybody's buying. So a ton of new people bought from here to here. All right, so this range right here, the most people. Hold on, let's see how quick this growth was. So yeah, at this point, there was about 7,123 unique holders, and we spike up to 9,021. So an increase of about 2,000. From here to here, we go from 5,000 to okay. So about the same thing. About the same amount of holders bought here as bought here. So this is important. Why? Because for the people that bought here, all right, for the 2,000 holders that bought here, most of them are in profit. Okay, most of them are in profit. But the danger is, as price starts going down here, these people are likely to sell at break even. All right, which makes the danger of coming down here kind of increase the risk of further selling. All right. Conversely, if price is to go up, all right, since the other like third of everybody that bought Vi, the 2,000 some people that bought here, okay, they're in drawdown. So they might hold or they might sell at this consolidation area. So however you want to slice it, I'm seeing strong resistance on Vi at 162, in the range of 162, because that's where 1/3 of all the bag holders are, and they're underwater. All right. Furthermore, I think if price loses 104, so about 10 cents, if price were to lose the 10 cent mark, I think we've got quite a supply risk of selling. Because then we're stepping into we're getting into break even / unprofitability of the other third of the market participants who bought throughout here. All right. So overall, Vi has had a good rally. we can see when the rally kind of kicked off due to social dominance. So Vi is very sensitive to social sentiment. It basically began its run on a huge increase in social dominance, meaning nobody was talking about Vi, or the level of Vi chatter was consistent. And then all of a sudden, I would assume some kind of campaign started that only lasted a few weeks, that spiked its social dominance all the way up, and then price started going off to the upside. So so we know that Vi is very sensitive to tweeting, to social exposure. So what I would recommend is, if you're interested in this particular asset, I would go make a Twitter watch list. First off, I would go try to research what it was, what tweets, what 4chan post, what caused this rally to occur in the first place, because we can see, we go back to social dominance. Oh, I just realized something. Okay. Yeah. Guys, I'm going to have to leave this. We're going to have to, 25 minutes left in the stream this morning, guys. It's funny. I'm using Sentiment right now to do analysis, and I have a meeting with Sentiment's development team in 25 minutes. They've got a new bot they want to show me. So, yeah, I would go research Twitter, 4chan, Reddit, whatever it is, and see what it was, what accounts, what influencers kicked off the rally in the first place. 2, I would then follow those people to see like what other coins they tweet about. And 3, I would, wait to see what they say about Vi, because it's likely that their influence will kick off the next rally. Now, I do like the fact that Vi has pulled back quite a little bit to this previous consolidation range. So just based off technicals, is it a bad bet to enter into now? No, bull market's good. We want to be buying dips. We want to be adding. So if you like Vi, I don't know anything about this token, this project, so I can't recommend anything as far as like long-term. Oh, it's good, blah, blah, blah. This could be flash in the pan like everything else. But again, that's important. All right, so we can hide this. Let's look at active addresses. All right. Active addresses was on the rise, was on the rise, was on the rise, was on the rise. This is what we want to see. We want to see active addresses rising. No, we don't just want to see people holding. We want to see that they're actually active on network and buying and selling, right? Because this just means trading activity too. So trading activity is rising. On-chain activity is rising, rising, rising. It has a huge spike at the top. Why? Because everybody's sending their coins to exchanges to sell them. Oh my God, get out, get out, get out. And then we've just had, excuse me, we are now, why can't I, thank you. We're now on the decline. All right. So on-chain activity is on the decline. So I don't like to buy into DeFi or degen coins if network activity is on the decline, because it means that, what activity is winding down, right? Activity is winding down. You want to get when, prices are consolidating and you start to see that action slowly ramp up. That is ideal. All right. That's ideal. Daily active addresses, we see the same pattern, nice smooth run up and then now decline. Transaction count, this is how many transactions are being conducted. So this is just a corollary. This is additional information on top of active addresses. Again, we can see the same thing. We can see this run up into the rally, and now we start to see this trend to the downside. I don't like to see that. And then transaction volume as well. Again, a little bit harder to see, but again, we can see this very clear pattern of run up and increased transaction volume in USD activity and then decline. All right, so technically it doesn't look too bad. Again, nice pullback in a bull market. So if you just wanted to keep it simple, you could DCA. If this is something that you're willing to hold through drawdown, that you think will do well in the bull market, that you think is forming a good project, I don't know. Again, not a bad spot to pick it up. I don't really recommend doing that right now. It looks like network activity and on-chain activity is winding down and dying down, so very consistent. It doesn't look like the selling is over yet. Otherwise, we would still see network activity picking up if everybody was still kind of rushing to sell. So I put this one in your back pocket. Maybe make an allocation here just because it's a good pullback. We're buying at support, but I would definitely leave dry powder to buy at lower prices. And ideally, I would wait to see that network activity picking up prior to entering into a larger position. And then what was the other one you want to talk about? You want to talk about Man, you guys are talking so much. Akash, the Akashic record, the Akash network, AKT. What is? Thank you. This, okay, this, and one. Price of AKT, we want. Go get that right. That's just BTC, isn't it? Yes. We want social dominance. We can look at social volume too. On-chain whales. No. That might be helpful. We don't have a lot of data here on Akash, unfortunately. But we'll look at what we got. We don't have as rich data as we had for Vi. Locked up like a penitentiary. Okay, social dominance. Again, same thing. This just lets us know, like, what are the trends? How active are people talking about this on Twitter, et cetera, et cetera, et cetera, et cetera. Again, we can see, again, these big spikes in social dominance. A lot of people talking about Akash as it was rallying back in August up to $1.70. You can see that social dominance fall off. But again, look, you can kind of see, right? It's not perfect, but you can see this trend of rising social dominance. That's the yellow, guys, the graph on the bottom. We can see this trend of rising social dominance. Oh, thanks, Dave, for the 10. My God. I appreciate you, man. Thank you, dude. You guys are awesome, man. I think I actually, you know what? Never mind. Look in the chat. Look in the chat right there. That's AP. It's right below. I don't know if you guys can see. If you guys are maybe for the vision impaired, you just look right down there. The most recent chat message. That's Alexander Pearson. All right. We call him the Baron of DeFi. The man's a genius. And he's saying he hears great things about AKT. What he's saying is this is the next 100x coin. All right. That's what he means. All right. He speaks in riddles and mysteries. All right. Riddles and mysteries. But that sounds like I'm just no, for real. Alex knows a lot about DeFi, so if he says it's good, it's good. Yeah. So social dominance is rising into this rally. Social dominance continuing to rise. Now, I will say we can obviously see if we're following these trends. We do see now since January, since the end of January, we've seen this kind of social dominance like die down and in accordance with the fact that price is failing to make new highs. But at the same time, we did see like a drop off here in this consolidation area. And then that's fine. Like social dominance kind of dropped down. Then it started rising and then we broke out. So again, I wouldn't necessarily say sell off. AKT looks a lot better here than Vi. I'm not going to lie. AKT this is not a bad looking chart. This looks better than Vi. Based on the limited data that, of course, we do have here. I did like that richness of data with Vi. But yeah, social dominance is dropping off here, and we are failing to make new highs. But again, we could just be consolidating before a new breakout here. So just watch this. I would watch to see if social dominance does start increasing. That would be nice to see. Oh. I don't want to delete. Oh, I can. Okay, add. Oh, wow, that's clunky. I'm gonna tell them they're gonna have to add a remove all button. Show metric. All right, social volume similar. We can see that. So we can see the same trend here, guys. We can see the same trend. They obviously big spike on the first run up. Social volume drops. We can see it rise. Very steady trend, rising social volume up into the rally. And unfortunately, we can see that same trend of AKT social volume falling off. So again, we haven't made any huge declines, but just looking at this, probably the safest thing to do is secure profit at this point in time, and then look to see if that social volume starts rising up and if we start pushing back up. You can always re-enter. You don't have to sell everything too. Just take a little bit of profit here. It's all good. The moon control us. Moon does control us. All right. Daily trading volume in USD. Again, very clear trend. We can see that this USD trading volume rise up. But unfortunately, we are in a bit of a down. Actually, you know, I wouldn't say actually. We are in a downtrend. All right, on trading volume since we peaked up here. All right, everybody can see that. Everybody can see that. But big volume today. Big volume over the last couple of days. So maybe we're gonna get that breakout now, and we can see that if we see that in accordance with volume rising up, social volume, probably a good one. Now let's see if this thing's a piece of junk or not. Development activity. I mean, it looks like they did some commits back in September and they did some commits in October. I mean, fair. All right. Like there was a lot of development activity up into 2020 and it just kind of falls off into 22. And now it's just basically falling off the map. So it looks like they're not really working too hard on it right now. And it looks like they haven't been working very hard on it for like the last 2 years. That doesn't necessarily mean anything. Like maybe all the work is done and it's just this great, amazing product. Or maybe it's dog crap that they stopped working on. So I don't know. I'll leave the hat on. Technically, it looks good. Everything looks pretty good. I would probably sit on my hands right now. I definitely look to take some profit. And then look to see if we kind of get that follow through. Did I really make this mistake? Was I really not all the way over to the right and I didn't see that the price is already breaking out? Are we serious? Yeah. I did. All right, so listen, social volume's still in a downtrend. Social dominance is having a big spike because everybody is probably talking about this pump right here. Wow. Silly now. Trading volume in USD has broken the downtrend. Volume is picking up. And they decided to push anything to GitHub? No, they did not. They did not. Okay, so I do like the AKT chart a lot better. I do like the AKT chart better. We are seeing a breakout. Social dominance is spiking. The only problems I see. That's all right. Yeah, it broke down. People are now talking about it again. Like AKT looks good, man. AKT seems like it's pumping. Looks like it's making another leg. Appreciate the generosity, man. Thank you for the 15. Man, thank you for the 15. I appreciate you, man. Thank you so much. Thank you. All right. What do we got? Guys, 10 minutes. Alex, still believing in my 46K puts for this Friday expiration. I mean, listen. Yeah, I think that can totally happen. Our daily chart. Guys. Nope, we already talked about this. Life's good. We're fine. Sorry. Yeah, guys. I missed a lot of chat. That statement signaled a short this morning. Originally there was no hurst, so I was planning to close the bottom of the range, but I came up at market open and told me to stay short. Oh, okay. Oh, that system. Okay. Yes to crypto. Dollar Cox averages every single day. It's important to reference the cock diploma. Dixie and Bitcoin haven't been as inversely correlated as logic suggests. Do I think the gaveling? Oh, the having pullback's finally here. Got 1/3 of my capital still sidelined, promising myself the dump will come. It always has. Listen, I don't want to call the top because I'm not very good at it. All right. I don't want to call the top. I just want to trade and make money. All right. I mean, it's about right, you know, like we're getting there, you know. But at the same time, I don't want to bet super huge on it, you know. Again, in the long run, I'm going to make a lot more money longing crypto this year than any money I could make now playing the short, right? Of course, I want to catch the short. But IV is expensive now. Options are very expensive now for me, and that's the way I would want to trade it. Yeah, IV is at 51.8%. So as I kind of said, like volatility is right in that. Let's look at the Bitcoin volatility index. You know, listen, this is cheap options. This is expensive options, right? So I guess they're not. It's not terrible. It's just, you know, yeah, because at the money puts right now, if we bought 50,000, or if we bought 49, yeah, 3,329 to control 1 BTC worth of option interest. Alex, where's the max pain? Well, that's a good question. I think we're gonna. It looks like we're gonna go to the. Are we really gonna go to the liquidation zone? Is that what's gonna happen? Looks like longs are gonna get wrecked. Sorry. Liquidation zones. Max pain. Let's take a Gandy. 3-day. Oh, options max pain. The price at which the most options expire worth. That you know, that is an amazing question. I don't know. Here's the thing. I get a lot of newsletters. I get a lot of options newsletters for crypto, and I kind of get my data from there. I actually don't know how to. I don't know how to calculate that for myself. Because what I would need. Yeah, but I don't think I'm not aware of a. I mean, I'm sure they exist, but I'm not aware of a nice dashboard that just has all that data for me, like laid out the way we're kind of talking about. Let's take a Gandy. Let's see what we have on Glassnode. I'm pretty sure. All right, let's look at. We want options. Go look at Bitcoin options markets. They got a nice dashboard here. Options open interest is down. Options volume is down. Skew would be important. Oh, maybe skew. SK3W. Yep. Skew. This used to be the go-to website for Bitcoin options. Load. Bitcoin options skew. For that. All right, the bit skew and ETH skew indexes are a measure of expected 30-day implied skewness. Bitcoin and Ethereum. All right, that's totally fine. I mean, again, skew is good here, but is not necessarily what we want. All right, this is cool. I like that. Nice. Glass. Did I not just have last? There we go. No, that's the answer. Who taught this guy how to do any kind of research? What are you doing? Yeah. Yeah, because the data that we need is we need to see basically almost like a VR VP. We need to see like open interest or purchase history by price, and that lets us know. Again, I feel like that data should be on Deribit, but I also Deribit indexes, broker volatility, market data. Let's try options data. Yeah, the order book skew. Yeah, here's the strikes. Term structure. Yeah, you know what? I need to do some. Listen, that's a silly thing that I feel like I should know how to do, but I just don't. Right, and I don't know where to get the data, or I don't know of the data that I have access to. Yeah, yes, but I on CoinGlass. Yeah, hold on. Let's look at CoinGlass's options here. You guys, I'm sorry, man. You guys are gonna have to spoon feed me a little bit more here. I'm over it. Okay. Let's see here. 42K is max pain. If price expires below 42K, you're saying that's max pain? That makes sense. Makes sense. Question, what's your take on ERC 404s where tokens and NFTs collide? How does it change your analysis of the underlying token? Okay. I have to be I'll just be completely honest. And I got to go in like 2 minutes. So I got to wind up. So I'll answer your question and then I'm going to wind up the stream. The answer to your question is I don't really listen. I'm not. There's a lot of things I know a lot about in cryptocurrency, but I'm not really up to date on all the complexities and the technical specs of the ERC 404 token standard. All right. So I get it. I've read the primers. I get the kind of things, but I honestly don't know or care too much about it right now at this point in time. Alex hates them. They're dumb. Everyone's going to love them. At this current point in time, I don't have enough education or information about them to feel differently or to feel any sort of way about them. But I will. I know they're important, but it's like, man, I just got done researching modular blockchains and and like reverse swaps, like an account abstraction. Like, cool, I finally mastered that. And now it's just that it's so hard to stay up to date on everything in crypto, man. It's just everything everywhere all at once, all the time. So just like picking my niche. That's why, again, like I revealed my portfolio to everybody in the premium trading group, and it's a good portfolio. I'm very happy with it. I think I'm going to make a lot of money with it. And people were like, what about this? What about this? I'm like, listen, I don't understand that stuff. I haven't researched that stuff. I invested in the stuff that I researched and understand. I don't have enough brain power or time to know everything about everything. Like, what do you want from me? But all right, guys, we got to wrap up. I want to thank you guys so much for joining me for another episode of the live crypto trading room that we bring to you every single morning, breaking down the cryptocurrency markets. If you guys want to support what we're doing, the best way to do that is to support the stream directly by becoming a channel member and sponsor of the show here on YouTube by clicking the join button. We could not make the show without all of you guys' continued generous support. It allows us to continue to make free content like this every single day. If you would like to support the show, but you cannot afford to do so, then you can just click the like button. That really helps us out more than you could possibly imagine. Get this content out to people who have never seen it before and get us up in the feed. Because right now we're like the 30th on like Live Crypto, even though we have more viewers than half of the top 25. Anyways, we will be back tomorrow morning at 8:30 a.m. Approximately, to break down the markets. If you have any questions, comments, or concerns, please leave them in the comments section. Make sure to join our Discord, sign up to Fairdesk to get some great deals, and links to everything you could possibly need down in the description below. Trade safely, guys, and I'll see you on the next one.